What's up, guys? Welcome to another video by Sharps Blueprint. I'm quickly going to go over the GBP card trade we had last week. Do well to stick around till the very end of this video, as I will be sharing also a free trade idea or setup, whichever one you choose to call it, for this week. Before I dive right into it, I have to say this, guys, and believe it or not, this took my trading to a whole different level. If you have been following me and my videos here on YouTube, you must have heard me say a couple of times, I'm always looking to have every of the time frames in alignment. Personally, I wouldn't take a trade if I don't have at least 3 time frames in sync. And I know it sounds cliche and basically clingy telling you guys this. But the fact is, this helps me limit my jumping in and out of trades. It also helps me focus more on higher probability trade setups, thereby putting the odds in my favor, minimizing my risk. So what I do is I love to see the weekly, the daily, and the 4-hourly time frames in alignment before taking any trade setup. Typically, these higher time frames mentioned are my market structure determinants. Anything beyond the 4-hourly time frame I use for entry executions and other confluences. This right here is a 200 pips trade we took on GBP card sometime last week using this exact rules at play. I'll quickly clear up the chart so I can go over the reasons as to why we went on this long trade. Yeah. Starting out with the weekly time frame. You can clearly tell from the weekly time frame we are bullish on GBP card, having broken and closed above the previous swing. High right here. So at this high, that led to what? This swing low. So for as long as we stayed above, for as long as we stayed below this swing high, we're very much what? In a bearish market structure. But we can clearly see what we had a break of that previous swing high, shifting the market structure from what, from bearish to bullish. Also, if you wish to go for more confirmations on that, you decide to bring in your trend lines. And then you can see very well, we're already broken out of this trend line. But then it's already very obvious the market structure has shifted from what? From bearish to bullish. And then we came and then what? Price created what? A higher high right here. And then we had what? A retracement. Where did price come into? We could clearly see price come back to its what? Previous what? Weekly structure. So you can see, looking to the left, we had this level previously as a resistance when price was below the level. So we had a nice break of the level, and we had price come back to retest this level. Coupled with the fact we had ourselves a round psychological number at the level, 1.6 to 1,000 psychological round number. So we had what? Break the previous resistance, now turned what? A new support, because very clearly we are now above the level, and the previously broken resistance becomes a new support. And also we have a clear weekly break and retest of what? The 50 exponential moving average. So this is all in a bit to gather what confluences as to why we kind of setups, the kind of trade setups we need to be looking out for on this here right here. So we had what? Weekly time frame, very clearly bullish. We have the weekly time frame break of market structure, previously resistance, now turned what? New support. We have also what the weekly time frame clearly price breaking above what the exponential moving average, and then what retesting also the exponential moving average. And then also quickly we noticed what at the retest of this level right here, we had a kind of first reaction off of the level, and then we quickly came back to the level a second time to retest the level. And again, this is from where we had what our entries to go long. So clearly we're having to see what at the retest of this key level, we're having to see a weekly double bottom, which is what? A reversal chart pattern. And guys, once you start seeing what chart patterns on the higher time frames, like the weekly and the monthly, the probabilities of these chart patterns playing out as expected becomes very high. And so we clearly have what ourselves with a weekly double bottoms, and then we had ourselves a nice what? A weekly bullish momentum candlestick close, confirming the what? This level is very potent, and we would very much be expecting what? To see more buying pressure from the level. After we had that was nice weekly bullish engulfing candlestick, just off 1.6 to 1,000 psychological number of the 50 exponential moving average. And then this takes us down to what? The daily time frame. So from the daily time frame, what can we get to see? We can see upon the second retest of this level right here, we kind of had what's a shift in trend. Clearly, we're seeing market printing as what? Lower highs and then lower lows. And then we clearly had ourselves what? A nice what? Structure shift from bearish back to what? Bullish market structure. You can see if you decide to introduce your trend line, which is also very okay. You can see we have a nice what? Bullish momentum candlestick close, breaking what? This trend line. And also confirming the shift in market structure would be what? The fact that what? Previously we had this as our swing high that led towards this swing low. And you can see clearly we're having to see what? We're having to see this very daily bullish momentum candlestick break and closed above what? This previous swing high, shifting the market structure from bearish to bullish. And also what we can clearly see, we have ourselves what? A nice what? Daily inverse head and shoulder pattern with what? A break of the neckline, confirming also what? The shift in market structure. So we can clearly see we have lots of confluences at play right here. telling us what that the buyers have pretty much stepped into the market, and we are very much expecting to see more bullish pressure from GBP card. And so what we did was what identified the fact that we had what an inverse head and shoulder pattern whose neckline has been broken. Somewhere around this level right here. All right, somewhere around this level. That's really not important. I was trying to see if I could get a round psychological number there. So I think we could 3,000. So clearly, yes, we had ourselves what? Around psychological number there, 1.6, 3,000 psychological round number. And that having to be what? The neckline of what? The inverse head and shoulder pattern. And now if you know your chart patterns very well, you know we want to actually what? Look out for potential buying opportunities once we have a confirmed head and shoulder pattern. And that would be what? At the break of the neckline, that would be the best time to look out for what? Our potential buying opportunities. So we had a retest of the neckline. Clearly from the daily time frame, as you can see, we also have what? A daily candlestick break of what? The 50 exponential moving average, and then we have a retest also of the exponential moving average. And clearly introducing our Fibonacci from previous swing lows to most recent high right here, you can see what? The lots of confluences at play at this level right here. Also, we're having to see what? Our Fibonacci 61.8 golden level aligning perfectly with what? With the neckline of the inverse head and shoulder pattern. So guys, there's so many confluences and strong reasons why we needed to what? Look for potential buying opportunities moving down to what? The smaller time frames, right about this level here. So from the moving down to the hourly time frame. So clearly we have established that what? The weekly time frame is bullish. The daily time frame also clearly bullish. And then taking this down to what? The 4-hourly time frame, you can clearly see these guys. It's so obvious. We have what? The 4-hourly time frame, swing high, and then we have what? The higher high. And then we had ourselves this previous swing low that led to what? This higher high. Clearly, what, as you can see, the 4-hourly time frame also what? Is very bullish. So now we have what? 3 of the time frames in alignment. We have the weekly time frame bullish, the daily time frame bullish, the 4-hourly time frame bullish. Now, guys, there is no reasons why I should be looking for any other trade opportunities other than what? Buying opportunities. Because what? We have the majority of the time frames what? To the upside, bullish. So what? We only want to be looking at for what? Buy setups, because what? They are higher probability trade setups. So clearly what? We had what? This nice what? Bull run that led to this higher high right from the 4-hourly time frame. And this is that retests we had previously identified from the daily time frame, as you can see. So if I bring back the Fibonacci retracement tool from previous swing high, from previous swing low, right here, to the most recent what? swing high. We had price coming to retest what? Previously, as you can see from the 4-hourly time frame, we had what? A key level, acted what as a support right here, and then a resistance, and then a resistance. And clearly, because we're above the level now, we're seeing the level acting now as what? A support also. So we're clearly having to see what price retest what? The 61.8 Fibonacci golden level in confluence with the fact that what? This level right here is the neckline of what? The inverse head and shoulder pattern as we have established from what? From the daily time frame already. And then we're having to see what? From the 4-hourly time frame, we have a break above what? The 50 exponential moving average. And then we're having to see what? A retest of the exponential moving average expected to act also what? As a dynamic support. All of this playing at the very exact same level, guys. Now you can see what? How the confluences are so strong. And then what? We add ourselves what? A nice what? Extended double bottoms also from the 4-hourly time frame, as you can clearly see. So we tested the level the first time, and then we had price reacted off of the level, and then we came back a second time to the level, and quickly we had ourselves what? A nice what? Momentum candlestick. You can see what? This is a combination of both what? The rejection and then what? The engulfing candlestick. As you can see very clearly, what nice rejection, and then this candlestick closed, engulfing what? 1, 2, 3 previous candlesticks, telling us that indeed what? The buying momentum what? Has stepped in from this level. Well, at the close of this bullish engulfing, fairly momentum candlestick right here would have been what? A perfect would have been a perfect signal, entry signal for longs right here. And then we'll be targeting, our target was what? The negative 27.2 level, Fibonacci level. Stop loss is just below, but I did not get in just at the close of this fairly candlestick right here because I kind of had a little too big stop loss on this, so I had to switch down towards the 1-hourly time frame. Yeah, okay. So this is our TP level. So I can take this out now, guys. And then moving down to the 1-hourly time frame, from where I had my what? My entry. Now, even if you want to go a step further to start analyzing this, you can clearly see, guys, even the 1-hourly time frame, we are having to see what? A bullish market structure from the 1-hourly time frame. And this is the level right here. This is that 4-hourly momentum candlestick close we saw from the 4-hourly time frame. And then what? We had, if you can see very clearly from the 1-hourly time frame, we had this level right here. This level right here was what? As a 1-hourly market structure. Yeah, so as you can see what? Right here we had the level as what? A resistance, and eventually we had a nice what? Break above the level. So I had myself and the other persons I sent out this signal to, we had ourselves what? A buy limits But our stop loss just yeah, I think we had a 40 pip stop loss on this. And then what? But our TP at the negative 27.2 fib level. Securing ourselves with a 1 to 5.4 RRO, total of 217 pips on this trade. And you can see how very quickly what we had price what rallied very quickly, eating our TP for a nice 200 pips on this, guys. And you can very well see we add what every one of the time frames what in alignment. The weekly, as I established, the weekly time frame bullish, the daily bullish, the hourly bullish, even the 1 hourly was also bullish. And so we had every one of these time frames were pointing very clearly to the upsides. And so looking out for what? Buying opportunities, we're only trying to play it safe as we had what? The directional bias already to the upside. And then I said I was going to drop a free trade idea. And quickly, that would be on NZD card, guys. Yeah, so you can screenshot this right here, guys. So this are the confluences at play for this very setup right here. And the very reasons as to why what we had ourselves not a juicy buy opportunity from this from GBP card last week. So moving to the next would be what? NZD card. NZD card. Yes, so very quickly, I'll clear up the charts right here so I can start out what the analysis on NZD card as this would be presenting us with potential buying opportunity also at the open of market tonight. It's Sunday already, and then a few hours from now the market will be opening. So I quickly want to drop this free trade idea or setup very clearly from on NZD card. Moving to the weekly time frame, guys. I don't know if you can see very clearly already. Just like we established from GBP card, we are very bullish from the weekly time frame perspective. Again, we have ourselves what? This level right here, being the previous swing high that led to what? This swing low. So for as long as what we stayed below that level right there, we're very much what? Expected to still be in what? In a downtrend. But now you can clearly see what we have a very what? Bullish market, rallying all the way to the upsides, breaking above what the previous swing high, shifting the market structure again from what? A bearish to what? A bullish market structure, as you can see that right here. So very clearly we have what? The weekly time frame bullish, guys. And also we are having to see what? From the weekly time frame, we have a break above what? The 50 exponential moving average. And then we have a retest of the exponential moving average. And because we're above the exponential moving average, in this case, the exponential moving average is expected to act also what? As a dynamic support. You know this already, guys. So yeah, we have a break and the retest of what? The 50 exponential moving average, in this case, expected to act as a dynamic support. And then what? We are having to see that what price is currently retesting what? The key level Guys, look to the left. It's really as simple as it gets, guys. You can just look to the left and you can see what previously we had what the level acted as a support right here. And when we broke below the level, we had price come back to find what resistance at the level. And now we're having to see price break back above the level. And then what? Because we're above the level, expecting the level to act now as what? As a support. Guys, you can see this so very, very clearly. So where the support becomes what? A resistance. And then a previous broken resistance becomes now what? A new support. So guys, you can see very evidently we're having what? Our regular support right at this level. And then we're also having to see what? Our 50 exponential moving average acting as what? A dynamic support also. So we have two confluences already at play. Also, considering the fact that what? The weekly time frame is what? Very bullish. And then again, let's see if we can have ourselves what? A round psychological level. Okay, let's yeah. So you can see we're having ourselves what 0.83500 psychological round number right at the level also. So and then we had what last week's candlestick closed as what we had the nice rejection from the downside, and then coupled with the fact that what last week candle closed very what bullish, engulfing what 1, 2 previous what 2 weekly candlestick. Now you can see what the chances that what this is about heading to the upside is way higher. Clearly, we'll have a break and a retest of a key level, a break and a retest of what the 50 exponential moving average acting as what a dynamic support, previously broken resistance, now turning support, and then we're having to see what price brings us what a momentum candlestick, a weekly what bullish engulfing candlestick from what from a key level, signifying that what we're most likely what going to start heading to the upside. Now, if you take a very close look at what the scenario we had on GBP card, guys, you would see very, very evidently that what GBP card and NZD card are looking what very similar. So we are only having to see what the GBP card is kind of moving ahead, while what the NZD card is only just about to what start playing out just the way GBP card did last week. So if you go back and compare these two charts very well, GBP card, the previous breakdown we did and the trade we took last week, and then right this setup, you can very see what they are both very, very similar. And then we're picking up clues from what? From the movement that GBP card has already made last week. And then what? That is it for the weekly time frame. Moving down to the daily time frame. Guys, again, you can see this is very, very clear. I'm not making anything up right here. Now you can see what we are having to see from the daily time frame. We had this level previously, and then we had a drop, and then we had this level, we had this drop. So we had this being the what? The previous swing high. So we had this being the previous swing high. And what does that mean? That means what? From the daily time frame perspective, we were going to continue being what? In a bearish market structure as long as we stayed what? Below this level right here, being the previous swing high. But then you can see that's not the case. We are having to see, just like we had from the GBP card I previously explained the trade setup last week, we're having a nice what? Bull run that has broken what? The previous market structure, shifting what? The structure from what? Bearish on the daily time frame. as you can see, towards a bullish market structure. And it cannot get any easier than this, guys. You can see I'm not making this up. So here we can clearly see what we're having ourselves, what's a daily break of market structure. We're having ourselves also what a shift of market structure from the daily time frame, confirming what that we have shifted from bearish to what to the bullish market structure. And then this is already looking like what? Like we had, like the very case we had what on GBP card. So we have this key level right here. And then let's see if we can introduce around psychological number level. Yeah, let's see. It's 450. Now you can see what we're having ourselves what around psychological number right at the level. You can see also we're having ourselves this level as what a daily key level. Looking to the left, we had the level what a support, 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 support. And then we had a break of the level acted as the resistance. And now we're back above the level, having clearly seen price what breaking above the level. And then we're having to see what a nice what retest of the level. Guys, it cannot get any simpler than this. It can't get any simpler than this. And then what we clearly can now see what a nice what daily candlestick retests and what a rejection of what this daily market structure. So clearly we have what on NZD card, the weekly time frame bullish, and then we have also what the daily time frame bullish, 2 time frames. Now let's take this down to the hourly time frame. On the hourly time frame, as you can see, again very clearly, we had this level as the previous swing high that led toward the swing low. And now you can see again very clearly we're having to see price what made what a bull run, breaking above the previous swing high, shifting the market structure from what? From bearish to what? Bullish on the 400 time frame. Now you see, guys, weekly bullish, daily bullish, hourly bullish. There's no reasons why we should not be looking for what? Potential buying opportunities from this level, right about here. And so what then do we notice? Well, we're testing what? We have a hourly break above what? The 50 exponential moving average. And then we're having to see price come under and then what? Retest the 50 exponential moving average. What then again do I get to notice? If I bring in what? My Fibonacci retracement to a previous swing low, from previous 4-hourly swing low to most recent swing high right here. What do you get to see, guys? You can see what? We are having this level what? As a Fibonacci reversal level, 78.6 Fibonacci reversal level. Also coupled with the fact that what? We are having to see price retest the 50 exponential moving average, in this case acting as what? A dynamic support. Also coupled with the fact that what? We're testing what? A round psychological number 0.84500. Also coupled with the fact that what? We're retesting what? A 4-hourly and a daily key level. Previously, we had what? For every time price tested the level, we had lots of what? Bounce off from this level. And now we are testing the level from the upside. So we're having to see this level expecting to act as what? As a support. Now you can get to see the lots of confluences we're having from this level. So what am I looking to do, guys? Here, you can choose to get in on what? on a buy trade from this level right here. And then be looking to target what? Negative 27.2 as a first take profit on this. Or you can choose to what? Hold this all the way to what? The negative 61.8. So personally, you can choose to get in what on a buy right from this very level right here, because we are having to see what the price actions at this level looking what very valid already. Lots of what early rejections from this level right here. And then what? Even though preferably I'd love to what? See a nice what? Bullish momentum candlestick close from the level would have been what a better um entry confirmations. That notwithstanding, I would jumping in right from this level, still very okay. And then again, also moving back to the moving back to the daily time frame. What then would we expect from this? Would again expect what? Would again expect somewhere around this level right here. So we're having ourselves another key level right here. Let's go back to the weekly time frame. So yeah, somewhere around what 0.85 300 psychological round number. We're having ourselves what another level to look out for. As you can clearly see from the weekly time frame, previously this was what a strong support, and then we had a break. We came back and we tested the level, acted as a resistance, and then when we're back to the level again also, most likely we would be expecting price to react off the level when we get to this point. So what then would I be expecting at the open of market on NZD card, guys? So two things, you can choose to what? You can choose to get in on your longs right about this level, and then what? Look to get out maybe for nice what 100 pips on that. But then safer, a very safer trade would be what? When once we have what? A break above what? 0.85 300 psychological level. Previously, you can see this is a key level right here. And then what? We're below the level. So what then would I want to see? I want to see price come and break above this level right here. So I want to see price come and break above this level. And then what? We test the level. And then what? Look for what potential entry opportunities right here at the retest of this level to go longs, where I would be looking so these would be my TP levels on NZD card for this week. So first take profit level, and then what? If we have what daily close above this level, would most likely be expecting price to come into what this level right here. So you can choose what to get in on your longs, more like what a risk entry. Right at the open of markets tonight, you can choose to get in on your longs. But then what? A more conservative and safer entry would be what? When once we have what? A very bullish price movement breaking above what? This key level right here, 1.85 key level. Also what? That would mean what? We would have to see price what? Break this trend line right here. Now you can see how that adds up. So what at the break of the trend line, once we get what a very bullish daily candlestick close above this level, right above this level, guys, it's a no-brainer. When once we get a very bullish daily candlestick close back above this level, guys, look to see price come back and retest this level, and then what to get in on what a more conservative what buy entries with anticipated take profit levels at what 0.87 thousand, and then what second TP level for what 0.88 thousand. So that's it, guys. You can either choose to get in on your longs now at the open of markets from this level, looking what at the 37 pip stop loss or 1 to 3 hour, and then what that would be, like I said, a risk entry. A more conservative and safer entry would be what? Patiently waiting for what? Daily candlestick close, break and close what? Above what? 0.85300 watts key level. So that's it, guys. If you're not already in the Telegram channel, the free Telegram channel, I'll leave a link somewhere in below the description of this video. Do well to join the Telegram channel, as I would be giving what heads up on this very setup as the market moves during the course of the week. You really don't want to miss out on this, guys, and every of the other setups I will be sharing right there on the free Telegram channel. Guys, do well to what? Hit the subscribe button if you find this video very, very insightful. Turn on post notifications to always stay updated. See you in the next video, guys.